Good day, everyone. It's that time of the week again. It's Trade Recap Friday. And good news and bad news. Firstly, was not able to record the actual trade for you. So instead, I'm going to talk you through every stage of delivery. And the reason being is and if you are live with me, please let me know in the chat as well. I know that this is usually a recording, so not a lot of people are going to be live with me in this moment because we send this out to you, and you'll maybe find this on YouTube later, or you'll find it in our school groups, the Kingdom Day Traders group, as well as you will possibly find it in our Facebook group as well. So it will be sent out to you, but I'm going to get on it. Usually this is a shorter one. And I'm going to cover what I saw. This was a NAS 100 trade. If those of you are trading futures, this will be a NQ trade, but take it from NAS 100. I'm going to bring up my chart and explain through what we actually did here today. Right? Mr. Jason, welcome. So, and if I had recorded this, I would have shown you the end result of the trade in there, but I'll instead speak you through it. I was on the road today, myself and the wife had some errands to run, and so I couldn't actually record it. Otherwise it would just be recording for the hours that it took, because it was more so a London session trade that actually closed inside of New York session. So I'll take you exactly back to where I was at the time of the trade, and also our price developed from there. And of course, TradingView will put a little extra stuff on there for now, but we'll forget about that for now. And I'm going to take you from what I expected the price to do based on here. Okay, so firstly, I did my top-down analysis, as I've been teaching you guys to do recently. And I looked at my weekly. And on my weekly time frame, of course, we were coming into this gap over here, right? This gap over here. Now, you guys know I like to trade out of the gap and inside of the zones as well. And we've got this gap over here, as well as this last red candle to the downside. And we've been covering this a lot lately in the education as to why we trade like this. So we were between these 2 points. We were essentially between this gap over here and this one over here. The thing is about the weekly gap is that means there's so much price action that needs to happen in order for us to trade out of that area. And I wasn't going to trade out of the weekly gap. So I went lower down to the daily. And I wanted to see where we are. So this is where I started my analysis, okay? And so I noticed that on the daily over here, we were inside another gap.
So the number one rule that I've been teaching recently is being external on one time frame while being internal on another gives you a higher probability. Now let me show you what I'm talking about, and then I'll talk you through the actual trade as well. And Coach Brian King is calling me now. I'm just going to put him on this recording as well, so that he can see later on that he was calling me during this actual part, a live stream as well. So as we come into this particular level over here, I'm looking at this and I am saying, okay, I believe there should be some upward movement, but how do we do that? Of course, this green candle over here was yesterday's price action, and I wanted to get in on today's price action. So we got to follow along the price action. Now remember, this is a weekly gap and a daily gap. What is a gap? A 3-candle formation where there is space in between the two, okay? So let's look at this. So let me draw the gap on. So I've got this high and this low as the important point. And what is the gap? It's just imbalance, the origin of imbalance. In other words, just before the zone, right? This was the area that price started its imbalance from. Just answering Coach Brian over there. So when we come over here, right, price has gone into this level, and now I'm looking for upside price action. Why? Because this is bullish imbalance. Now I go down one more time frame just to confirm that we are getting that criteria, and this is what I like to see. We inside of a daily gap, right? We're inside of this daily gap over here. As you can see us come in, I'm gonna pull this back for some clarity. But now we've also got my criteria that makes it high probability. We've got this move up, move down, that zigzag, right? So in other words, we're external on the 4-hour, and that's what I want to see, while being internal on the daily, right? And I'm pairing those two things. Now that gives me an indication that price wants to rise up, but we've already done that. That creates a problem. We've already done that, and so I need to go further down. Now let me show you how the market is fractal and how it's doing it over and over. I already know now, and let me know if you're live with me in the chat. Just drop your name as well. I already know now that we want to go up, okay? So I'm looking for bullish price action. So remember what we did over here. I did the same thing again. Over here, there's this gap. So we draw that gap on. Now we've got a 4-hour gap. Okay, boom. There's your 4-hour gap, or FEG as some people call it. And I want to look at the same price action out of that level to go up again. Why? Because if I'm internal, being inside of a gap means I'm internal. And let me just show you that price went higher over here. All right, so I'm internal on the 4-hour. I want to be external on the 1-hour. So this same zigzag here needs to happen on the 1-hour. And this is an easy way to trace price. Watch. Same zigzag again. Up and down. Bam. Well, hello, Leith. Hello. Thank you for joining me. So we external on the 1-hour while being internal on the 4-hour. That to me is a signal that we're going to see higher price action in the same way that we saw higher price action from here on the daily. Okay. So what do? I see it's quite choppy over here. But if my 1-hour is external, right, and my 4-hour is internal, my trading time frame is my 5-minute, because it's based on my 1-hour. And so I was trading London session this morning, and over here, which is 2 a.m. New York time, is where price does the same thing. Don't believe me? This can blow your mind. Let me show you again. We were internal in the same gap. Boom. We hit it and moved up. That to me is a signal that we're going to go higher price action. Not only that, we have stop on breaker structure here as well. Right? If you're finding some value in this, please let me know in the chat as well. So what do? Allow one more candle to play out. Why? I want to see that same gap formation appear again. Your mind is going to be blown. Watch this. This is how fractal the market is. So remember, we did it on the daily, we did it on the 4 hour, we did it on the 5 minute. And now inside of that 5 minute again, right here, the same thing. High and lower the gap. So what did I do? I put my long position there, my stop over here, below that low. Now I was concerned I'm going to get stopped out because that's equal lows, relatively equal lows over here. But if you do the Dow as your divergence pair, or if you're trading the futures market and you look at ES, you'll see that ES goes lower while this one does equal, and that's a sign that you're safe over here. This is why you guys have to pay attention to the things I've been teaching you guys recently. Now, from this point onwards, Mr. Jason, I remember being in a coffee shop when I showed you this, so pay attention. I do a standard deviation from the overall low to where I think the target's going to be. And you guys know, if you've been in my classes recently, 2 to 2.5 is the point where I want to be. So let me do the standard deviation from that high to that low. Pull it up. Okay. And standard deviation over here. 2 to 2.5. Right? That's the area that price will hit as a target. Okay? So, full disclosure real quick. Inside of here, before I actually took the correct trade, I took 2 trades here. Inside of here, my first trade, I accidentally added too much risk on it. So, as it started moving down, I had to close the trade out and took a $200 loss on that particular trade. Right? Just so that it wasn't over risking. Then re-entered again as it came down in that same area, right? And was targeting the same point. There's my 2 to 2.5. Now, as I also taught you guys recently in class, what I like to do is, if I'm looking at taking profits on the way to the high, I don't want to take it at the overall high. I've noticed that a significant high before the overall high becomes an easy target. So this 2 to 2.5 lined up with this high as well. Now, I wasn't greedy about it. What I did was I brought price down a little lower under that, because that's a rally-based drop and that's a significant area. And that is my 2 to 2.5 standard deviation. And watch what happened in price. And I'll talk you through the next steps as well. Price came in the first time, tagged me in. I got stopped out here because I incorrectly entered with incorrect risk. Allowed it to go back in again. Took it with the correct risk, and you will see what happens. Notice something. You see how price holds this gap? The wicks are allowed to go over. That's why I have my stop at the swing point, right? The wicks are allowed to go over, but we don't want to see the bodies close over this gap. Otherwise, it means that the gap is failing. Now, over here, you might say, Coach, but I did see the bodies fail, go beyond it. And you might say, okay, but doesn't that mean it's going to fail? But if you bump this up one more time frame, you'll see there's another gap here that it's holding as well. I don't want to go to that now because that's too much information. But this was basically my trade inside of here with a target of a 2 to 2.5 standard deviation over there on top, right? And price prayed around. Myself and my wife was out. At this point, I've gone to break even already because it played around too much. I thought I was going to get stopped out. But of course, as the AM session, or rather as New York session came around, price did this, right? 9:30 open, spiked us up and hit the target over there. How does that look? Is that awesome? Isn't that great? Now let me draw your attention to something else real quick. Is on the way till there, you will notice that if you've got your trade correct, with the exception of things like this, right? Where there's a bunch of equal lows. Generally, whenever you get an impulsive move, it holds and it continues up, right? You get another impulsive move, you might say, Coach, but didn't it not hold over here? Remember what I said earlier, you don't want to see the bodies go. The wicks are allowed to go a little bit beyond it, right? And this is 8:30 open, and that's why it goes beyond it. But you need to be positioned before then. And so then what does price do? Holds this level, then gives another impulsive move, holds this level, that's 9:30 open, And then after that, a smooth sailing till there. Now, why does it stop there? Well, if you go to your US 30 or any other correlated pair with the actual NAS, you will notice that if this one fails to take that high, the other one has, and that's a telltale signal to get out. Okay? If this one, and that's why I don't get out of a trade just based on an overall target. I get out of the trade when one of them reaches that target. Now, you might be saying, Coach, I don't trade NAS 100. How do I utilize what you just said? Well, the way you utilize it is, if you were trading Euro USD and your DXY hits the target first, once the DXY hits that target, you get out of your Euro USD trade. Why? Because they are correlated and they should be hitting the targets at the same time. And if they don't, that means one of them are going to turn around on you, and that usually is a signal to get out. Now, let's say you missed that particular trade. How would I take the next trade? How would I take the next trade that might have set up, right? And we will now utilize the same thing and try and understand how we'd get to that particular area. And I'm not talking about the sell. I know that there was a sell as well. Unfortunately, I wasn't there during that time. That's the big sell, right? But how would I utilize that, the next trade that comes? How would I get into that? So let me show you real quick. Oh, that's the 4 hour. I want to go to the 1 hour. Okay. So on the 1 hour, we see the same phenomenon again. I'm going to take this opening line off here. Thank you guys for joining me. And if you're just joining now, please rewatch this. So I'm going to take off all of this, right? What are you doing, Coach? Well, from this bottom point, I did top-down analysis and established from the daily we're going up, from the 4 hour we're going up, from the 1 hour we're going up, and now we've gone into this 1 hour gap again. So I could reasonably still expect that we're still going up. Okay. So if we hit the 1 hour gap, students, you've been seeing a lot of this recently. I'm going to go to my 15 minute to make sure at this point, while being, watch this, while being external, let me just click there. While being internal, because price comes down here. In fact, let me take that candle off so you can see how it actually plays out. While being internal, when price comes here, I want to be external on my 15 minute. Let's watch. So I need an opposite zigzag on my 15 minute. And we play our 15 minute into that point. Boom. And as you can see, this zigzag is up. So I need a clear downward zigzag as I come into that point. And there's my downward zigzag into that point. That's an entry criteria signal. Go and check your trade. See it will play out every time like that. Then once that goes down, if I'm on my 15 minute, that tells me I can get in on my 1 minute. Right? And now I need my 1 minute to confirm in the opposite direction. So down, I need to go up. And this would be a pre-market trade. Right? The pre-market. And we'll wait till it gets above that. And I'll show you, boom. Above that, this will be my long. This will be my stop. Below this level and below that level. Right? Because that's an SPR in there. You guys know what an SPR is. And then the same target overall, which is that same high that I did the standard deviation from. And look at this. Look at the risk to reward on this. I hope you guys are appreciating this trade recap. The risk to reward on this one is 5.2. That's 5 times. Let's replay the chart, right? As you can see, right on that candle, we come in. We play around here. We come back in again. That's the second touch. My rules is 1, 2. I move to break even. So now I'm at break even on this trade, like that. After which that point, as we clear highs, I'll be taking profit, right? So let's check what happens after that point. We go there, right? Now, did we get the overall point? No. But the rules state as we clear highs, we take profit. So there's a lot in this video for you guys. So I take profit over there. Boom. It's my first one. Then, because there's nothing else over here, I don't want to take one that close again. That's too close. So I'll take one over there. I would then look further to the left for areas on this side to take profit at. So this will be my next one. Let me draw on a straight line here. Boom. No coincidences there. That's my next one. So what would this trade net me overall before taking me out at break even? I'll bring that back over here. And I'll put my stop back where it originally was. If I can get that. You know what? Let me just do it again. Entry over here. Stop over there. Target over there. I think my stop was actually lower till there. And that nets me at least 3R till that point. Okay. And then, of course, we get into the next session. CPI or PCE comes out. And the market then sells off quite strongly, at which point you would have had to be on a much lower time frame. Let me play it up till there real quick. My apologies for jumping around on the chart like that. Once price hits there, I think you'll be surprised to know that it's exactly the same thing. We hit there, right? We go down to a 5 minute. Watch when a gap appears. I'll tell you when it happens. Nothing yet. Nothing yet. Nothing yet. Nothing yet. Okay. It's on a 1 minute because of news, but this will be your first gap. And usually price will trade back into that with a stop above that high. And then it will fall off from that point. Right? There's your trade back in. Goes in with just a little bit. As you can see, just goes in. Let me show you an exact point. Tags in. And then trades out of that point down. And then, of course, that was the rest of the day as price action is right now. And even there'd be a small trade out of here on a 1 minute down to that particular point. So that's been the Friday trade recap today. As I said, took a $200 loss in the beginning. And with partials on the way up, $1,200 made. So up about $900 minus commission for the day based on that particular trade. But it's not what you make. And it's not every day that you make these type of trades. It's when they become clear. And we take losses, we take wins. But the idea is that we follow structure to those particular points. And so we are where we are right now. And right now we're in an indecisional point because we're back at where we started. So for me, I need to see price either break up on a 1 hour again to confirm higher price action, or close over here with this particular 4 hour candle through this gap. Let me take off some of those drawings. Close over here, and that will be lower price action from that point onwards. So we react to the market, and then we take the trades based on that. Of course, there are opportunities, but the opportunities will be on lower time frames, not on these higher time frames at the moment. But that's been your Friday trade recap. It's been Coach Chadwin. Mindset, multiplication, and management. You guys be blessed on purpose. Also, where possible, join Coach Brian at 10 a.m. CST, I believe it is, every day on TikTok. We're sharing some knowledge as well. So if you don't have TikTok, I understand, but if you do, go and check it out. It's interesting. Followers there massively increasing day by day. It's been awesome. Okay. Thank you, Elith. Thank you, Jason. Thank you, everybody else that's live with me and hasn't said their name while lurking in the background. I appreciate you all. It's been Coach Chadwin. Thank you, Liz. It's been Coach Chadwin. Go over this over and over. And for those who've been in class recently, go back to the class where I spoke about the master market profile. Let me refresh your mind, which is this. Consolidation. You get 2 phases down. Another one. Up. Grab. In. And expand. Real quick, take a screenshot of this. And here's all I want you to do. Draw on a higher time frame zone. So a rally-based rally, a drop-based drop, a drop-based rally, or even a gap. Either one of that, draw it on the chart, go to a place where the market has rallied out of it or dropped out of it, right? Listen to me. Give me an 8 in the chat if you guys are listening, if you've taken a screenshot. Once you go to that point, whatever time frame it is, I want you to cycle down time frames, looking specifically at how price came from that area. So if this is your zone on a higher time frame, I want you to go down to lower time frames and look at how price came out of it to go up. When you go down low enough, this is the pattern you will see every time if the market works, right? Of course, as you guys know in class, this is the formation you will get. But sometimes we might get this one, we might not. Okay, so remember that. This one is dependent on this leg. And also, you guys know this is model 3. But for the most part, you'll get a consolidatory period, 2 phases down, a reversal, a phase up, a grab of liquidity, a phase up, and then a large expansive move in the last part. So pay attention to that. This is shooting price action to the last part. Okay? And you guys should find tremendous value in that. Okay, thank you, everybody. You guys have been on purpose. It's been Coach Chadwin. Love you all. Have a good weekend. Spend some time with the family and just be good. All right? See you all. Goodbye.